Hello, welcome back to my network. I'm joined again with Dan de Jonge, the product director specializing in rare earths over at Benchmark Mineral Intelligence. Dan, good to be with you again.
Very nice to be here again.
Obviously, we last sat down, I think it was around 11, 12 months ago. Why don't we just set the scene? Obviously, back then it was pretty doom and gloom, China oversupply in the rare earth space, especially we were talking about NdPr. What's changed? What's happened in those 11, 12 months since we last had a chat?
So if I recall, last time we were speaking was sort of in the context of prices coming off of a very, very strong position. So we were talking about the market in the context of very new sort of stability and very new stability at quite low levels. So over the last year, that's persisted pretty much. It's been very easy to forecast rare earth prices because they've just been flat. They've varied by only about $5 a kilo over quite a couple of quarters now. And so what that means is that it's been very difficult for the ex-China market. So we've seen a lot of developers outside of China that had some very promising projects, that still have some very promising projects, really having to sort of reevaluate their strategies. So we've seen, potential merger talks between Linus and MP Materials. That was quite interesting. But we've also seen junior mine developers really moving towards de-risking of their assets and making sure that they're lowering capital expenditure, capital requirement as much as possible, just to make sure that the asset can go online. On the demand side of things, we've seen, I guess this is common news within the market, but we've seen a fair bit of I guess you could call it a slowdown from the EV side of things. But I think the main story here is supply centered, that the supply side of the market is growing. And, we have seen growth in cumulative market balance. So that's in material that's been produced and that will be produced in the future, but just can't really be sold just yet. And so we've seen that really change sort of the outlook for the next couple of years towards one where we're just seeing a market that's likely going to stay the way it is now for a year, maybe 2 years.
Okay. And just remind everyone of the sort of price fall that we had and where prices have sort of stabilized at the moment. You're sort of talking around that couple of dollar shift.
Yeah, right. So we had prices previously around, 2022. Prices were very, very high. So they were, I think they actually reached the 1 million RMB per ton mark, which was, I remember that day. It was an interesting day. Since then, though, they've been dropping quite severely. So they were well above $100 a kilo for, say, NdPr, dysprosium, terbium. All those prices were doing quite well. Ever since there was this rationalization within the Chinese market, this announcement from Chinese government entities that their objectives are stable input prices for new electric vehicles, that their objectives are making sure that the market is well supplied, more so than making sure that miners or processors are highly profitable. And that sort of, you need to see it from a full market perspective. You need to look at the total value of exporting a EV. That's where most of the material is mined in China, as opposed to just exporting that raw material. So prices were dropping a lot in that context, sort of continuously over quite a few quarters, and that sort of came down early 2023, sort of stayed at a level where we are now, which is around $50 a kilo for PRND oxide, and around, say, 250 to 200 for dysprosium oxide, again, per kilo. And these are very, very low prices. So we're seeing producers outside of China struggling to make money at these prices. These are what we at Benchmark see as irrational prices, right? If you're looking at a market purely from a traditional commodity economics perspective, you're looking at it in the sense of you've got multiple different agents, all who want to maximize their profit. Then the resistance point in the prices should be well above where we are now. And in spite of that, we're seeing prices persist at this level for yeah, considerable a considerable amount of time.
And your view of, I think you mentioned it there. Obviously, this is more about the whole supply chain within China around EVs, right? So you're essentially world domination of EVs is only going to work if you are able to supply them at the cheapest rate. And so I'm assuming they're taking a hit on their rare earth processing, so they can then. Well, how are you? Because I've been having a lot of chats about this recently in terms of what the end game is. Because how long can China sustain this period of creating? Because it's not just rare earths as well, right? I mean, you look at the manganese market, you look at the nickel market, you look at so many different
Right.
markets within the critical mineral sector, and they're all under pressure. Wherever there is a tightening or oversupply of China or a dominance in processing from China, we see these low prices. So, how does this play out over the next 2 to 5 years? Is this now the new normal? We're sort of stuck here.
Hmm. It's a very difficult question to answer because it really depends on individual markets. So I think if you're looking at, say, um, a market that has a higher level of diversification than rare earths, the chances are that the rest of the market sort of can provide more upward pressure on prices in the long run, can be more supportive. Within rare earths, it's tough for the market to do that by itself. So that's where, as I mentioned, as you mentioned, the strategic objective for China as a when you look at it as a larger economy and not just a set of miners and processors, right? When you can sort of appreciate the fact that the government has a fair bit of say over what happens in a lot of raw materials. It's a lot more valuable for the economy of China to create those EVs and to export those EVs than to really just do the rare earth mining and just do the rare earth processing and then sell that material and let other people make those EVs. It's very good, not only from the total value of the export perspective, but also from a viewpoint of employment and just total value of the whole economy. So I don't think there really exists a natural point at which it doesn't make sense for China for Chinese entities and the Chinese government to not incentivize that sort of supply chain dominance that they have at the moment, that full integrated supply chain. I think it's more of a question of is it possible for the rest of the market to grow at current prices, and if not, is a market bifurcation realistic? I think those are the two sort of key questions that will really determine how the future is going to play out. Because again, when you're looking at it from an incentive perspective, Chinese state-owned entities, they don't have I guess you could call it the burden of having to maximize their profits. They can just mine, they can just produce if that's what they're sort of being told to do, and they don't need to answer to investors sort of in the same way.
You mentioned two things there: bifurcation, and also whether or not the rest of the market are obviously able to produce at these sort of levels or these sort of prices. Let's go on to that one first. The whether or not the Western world are able to compete. Obviously, you were talking about mergers there, and you're talking about capex is trying to be reduced, and lots of engineering going on in the West. But and we have seen, I think we spoke about this last time. We have seen places like the DoD support rare earth companies in terms of their capex. I guess the real question, and again, another thing that I've been talking about recently is in private, is whether or not the capex is granted and is raised. Does that really matter if prices remain the same? And I'm not seeing any indication that, say, the US government or Department of Defense is going to subsidize the operation for its whole mine life and keep it profitable. So how does this work even once it is built?
I think that's the biggest question facing the market at the moment. So of course, capex is very, very high, just regardless for some of these mines. We're looking at billions of dollars for tons of material. So it's already a very expensive sort of industry to support, just purely without looking at any sort of government support, without looking at where prices are currently. A lot of the engineer works and all the sort of stuff is very, and processing and even the mining of this material is very complex, and as a result, it takes time and is even more expensive than you'd otherwise expect. So it's it's a tough one. So we've been doing a lot of cost analysis at Benchmark to answer this question directly, right? We've been forecasting the rare earth market with an understanding of costs, but we've really been building up, and we've recently finished our work in bottom up cost modeling to actually be able to understand how this all fits together. Because this is the key question when you're looking at how the market will develop. The key question is the cost structure supportive outside of China? So we're seeing some assets outside of China, which at an OPEX level actually do seem quite competitive. Some of them even have lower costs than what we're seeing in China. So that's where providing that capital support can be incredibly helpful. That can be incredibly supportive in making sure that there's a higher level of diversification, that you have access to raw material for your processing that you want to do domestically. For example, I think it's quite clear that the US and Europe both really want to focus on processing of rare earths, not so much on mining it. It's not that they're actively disincentivizing mining, but I think they'd much rather do most of the processing. And that's also what you're seeing is a lot of projects, particularly in Europe, are principally just processing projects. So that's where you sort of just need material coming in. And that's where those sort of lower cost assets, particularly in Africa, there in sub-Saharan Africa, there's some very interesting, very high grade, very high quality rare earth mining projects that are being developed that, if they can get over that capex hurdle, can be competitive. The question remains, though, for those higher cost assets. And when you're looking at a rare earth cost curve, it's one that's relatively flat and then becomes incredibly steep right near the end. So that's where there's a lot of sort of a large basket of a marginal producer that's just very, very expensive. And either they need to be supported, so they need to be supported by OEMs willing to pay a higher price for, I guess, strategic material that they have more secure access to, or you name it. There's any sort of number of relationships that can be found there, or there may come some other rationalization where it just doesn't really. It becomes clear that those prices don't really work for those assets. So that's definitely the case where you can provide as much capex support as you want. A mine will still operate for 30 years and still needs to be profitable for 30 years. And that's why it's difficult when you're looking at that additional sort of marginal level of production, particularly in higher cost areas.
Obviously, the other question was bifurcation, but just before we go on to that, just to add on to, have you seen any mining companies looking at changing their OPEX, looking at how they can decrease costs? Perhaps have any of them shifted from the traditional route of creating a concentrate or even making final products themselves in the rare earth space to, say, making a chloride and then reducing the overall OPEX and then sort of passing on the rest of it to the refinery or to the processors downstream? But are those sort of questions or those sort of ways of thinking starting to come around now in terms of where the job of the mining company ends and then it gets passed on to the actual the people creating the end product?
Yeah, that's a good question. So we have seen a movement towards simplification of flow sheets. Companies that originally wanted to do processing completely themselves, from mine to metal, mine to oxide, mine to you name it, really. There has been a movement towards just focusing on getting the one step right, and then potentially later on building that processing facility, or potentially later on reevaluating that strategy. So yes, absolutely, we've seen, I think, greater pressure to just make profit, and just make sure that selling an oxide at 100% payability is fantastic, but it's also much more complex. It's much more expensive, and maybe your profitability will be just a little bit higher, but the risks involved are so much greater that in this current market context, yeah, we're seeing um, continuous moves towards simplification of the flow sheet. So that means more mining companies that are saying we're just going to mine the concentrate, and then we'll look for partners for processing, and then later on we can reevaluate that strategy. And I think that's a rational approach. I think that makes sense. This is a very risky market, and that's a good way to minimize the risks that you have within your control.
Yep, no, I agree. You see it in other areas like mineral sands, for example. Some people make final products, others go down the concentrate route and then forward that on. Obviously, you
Yeah,
sell it at a lower premium, but you have a lot less OPEX and there's a lot less CAPEX to build it, and it makes sense. It's still just as profitable. Um, on the other side, so obviously we were talking originally about China. Obviously, one. Let me rephrase that. How impactful do you think incentives like IRA or the equivalent in Europe are to creating a secondary market for rare earths?
that's um that's a tough one. So I think their impact is greater for other markets than it is for rare earths. So IRA, for example, it's not something that really affects rare earths in the same way that it does, say, the lithium market, for example, right? It's just a different story there. So in that context, it's fair to say that demand was already fundamentally supportive. Now it's more supported, so that's great. The pressure to fill that supply gap coming forward is higher, but it was there already. So uh, you're not fixing a problem per se. You're just providing a little bit more support on the demand side. Again, just from the rare earth side of things. In Europe, you've got some more, I guess, direct uh, policy making when it comes to rare earths. So we've got the Critical Raw Materials Act. We've got this recent partnership between Europe and Australia as well. So that's where I think policy is looking to be a little bit more supportive. It's just not answering some very key difficulties, if you will. So Critical Raw Material Act says, you need to mine X% domestically by this point. You need to process X% domestically by this point. But that's just a little bit detached from reality. There are two major mining projects within Europe. There's also a few other ones. There are large concentration within Scandinavia. Um, Very high quality looking projects. They look great. Geology is very supportive. Of course, they're going to be incredibly expensive, but they're super early stage, and building them is going to take at least another, close to 10 years, if not more. Uh, Aside from that, Europe cannot meet that percentage mined domestically requirement, for example, from the CRMA, and it's sort of at present, at least, the EU has sort of stated what they want without providing too many tools for how to get there.
Yeah. Okay. Um, I guess looking at the demand side, you were saying that we've seen some weakening with obviously the EV side, or at least against what a lot of projections were a few years ago. And I think when we last spoke as well, we were talking about rare earths in magnets for things like wind turbines and whatnot, and we were talking about substitution of rare earths within those magnets and really what the demand case was. I just wouldn't mind digging in a little bit more in terms of the way that you and Benchmark are looking at how demand for especially NdPr and dysprosium, how that is changing and evolving, and is it this hockey stick curve that I guess a lot of people were predicting 3-4 years ago, or is it now sort of settled a little bit?
Yeah, that's a good question. So I think it's more the second point that you were mentioning. It's sort of settled a little bit, and that could also explain the demand slowdown a little bit, right? Where there was a bit of an explosion in demand, where demand was growing incredibly rapidly, and there's a big question of if this continues, how will supply keep up? But that's sort of an unrealistic expectation to imagine that that's going to just continue linearly. There has to be some sort of rationalization, which is what we're seeing now. But fundamentally, it's just still very, very strong. It's actually very similar to when we talked last. Demand hasn't changed too much. Of course, the numbers have changed. The numbers have grown. There's been some seasonality here and there. What you'd expect from a demand market, but on the whole, on the demand side, you still have continued efforts to thrift out rare earth materials. So to make rare earth permanent magnets with cerium instead of PRND, and to make rare earth permanent magnets that don't need heavy rare earths, right? That's a very big, very big source of interest. In fact, the man credited for inventing the sintered NdFeB magnet, his main sort of focus of research at the moment is on a heavy rare earth free permanent magnet. So that's one that would be able to withstand those much higher temperatures that you'd see in an EV motor without the need for dysprosium and terbium. And that would, of course, simplify some of the very realistic, very real, supply challenges that we're seeing. But again, that's from a forecasting perspective, from how we see that developing into the future. It's incredibly hard to predict breakthrough technology. Yeah, you can't, right? We're expecting thrifting to continue up to a rate of sort of marginal improvement. Same for PRND, but it's just still quite strong, the outlook, and it hasn't changed too much by what we've seen in the short term. It's the efficiency gains that you can get with a rare earth magnet based, motor system. It's just very efficient, and it just means that you can get a lot of savings across the car, and that the car can be marketed a lot better as well, because it's just got much better range, and it's just there's a lot of benefits to it. So in that sense, it's on the demand side, at least it's been quite stable, and it's still sort of the same. And I'm expecting, if we do this again in the year, I'll probably say the same. That's what I'm expecting.
Okay. Obviously we did touch on the supply side, and I think we really did make the case or you made the case very well last time we spoke. Obviously, by Novo, I think, what did it have, about a 300-year mine life at the time?
Yeah, 400 plus.
400 plus. And we were also seeing, I think, was it you I was speaking to, where we were talking about quotas coming from the CCP to keep production levels at a certain rate?
Yeah, that's right.
I think you answered this earlier, but I wouldn't mind just digging in a little bit more on this. If the thesis is that China are dominating the market so that they can produce the cheapest EVs, I'm assuming they won't be too infused with too many new entrants who are able to get their hands on rare earth and produce it at the current levels. Is there capacity for China to increase their supply even further and I guess disrupt the market more? Could we be seeing NdPr prices of $40-$30? Is that a reality in the future?
I hope not. I think now we're probably at some sort of real resistance point, where a couple of years ago that resistance point may have been about $40 a kilo, and again, that's, I guess, an irrational resistance point, right? It's too low for new capacity. The market at the moment, supply is not a concern. Supply is a concern 3, 4, 5 years from now. At the moment, it's just not a concern. And so we're seeing prices at about $50 a kilo, $45 a kilo. That's likely not going to go a whole lot further than that. From the supply perspective, it's very hard to tell at what point China will be more restricted in their growth. It's a little bit easier, I guess, on the heavy rare earth side of things, where they're very reliant on Myanmar and material coming from Myanmar that's being increasingly processed sort of at and around the border before it's being sent across. At least that's what we're seeing with some satellite imagery. We're seeing more and more being processed actually within Myanmar straight before going to the border. So maybe the value of that export changing a little bit, but there's a lot of material, a lot of dysprosium, terbium heading into China, and they haven't. China hasn't increased their heavy rare earth quotas in, I think it's upwards of 5 years. It's just been stable. While their light rare earth quota, well, hard rock quotas, but effectively light rare earth quotas have been growing massively. 20%, 25% year on year. So it's when we're looking at the indicators that we would use to predict sort of growth in Chinese mine supply, I think it's reasonable to expect continued growth. At the same time, there's so much sort of excess capacity for processing in China that what we're expecting to see is that China will increasingly look to import raw material as well to sort of relieve the pressure on the need to continuously grow their mine output, but still make sure that they can really, at very low prices, very economically process and keep all of that, sort of the rest of that supply chain domestically.
The capacity that they had, you said that they're not at capacity at the moment. There's still a lot of capacity in China where they could ramp up supply on the processing side.
Yeah.
Are you viewing that as that's there to match demand forecast moving forward, or is that there in theory if they did reach max capacity? How overloaded would we be?
If their processing facilities were at 100% utilization, the market would be very severely oversupplied at the moment, and also for the next few years would be just fundamentally oversupplied. You could even say the pure ND could begin behaving a little bit more like cerium, from a price perspective, if their full capacity was at full utilization. I think it is. Of course, you have to take some of their numbers with a grain of sand. Some of the capacity won't be fully built yet. Some of the capacity will take a little bit to come online. But the fact is, there has been a lot of investment by major Chinese rare earth players in processing capacity, not only from a separation perspective, a sort of intermediate beneficiation, but also actually magnet making. So there's a lot of capacity there that is waiting for demand to grow, but it's a few years ahead of demand. So maybe it's not all intended to be fully utilized. At least that's how we're seeing it. We're not seeing it as something as types of capacity that players are looking to achieve full utilization at over the next 2 years. But that being said, it is a good indication of, it does tend to sort of predict Chinese supply and imports with about a 2-year lag.
Okay. Do you think there needs to be more done in the West to support, or so you were sort of saying at the moment the IRA doesn't really impact rare earth markets so much, for example, and the European side there's a big wish list, but none of it's really been, it sounds like, funded properly in terms of what they want. Do you think there needs to be more to be done? And I hear this in nickel quite a lot. So, for example, that say down the line there's going to be a clean nickel price or a Western nickel price, and that is only really possible, I think, with government intervention. Do you think we need to get to that point, or under the guise that, or under the assumption that it's anti-competitive what's going on at the moment? I think that's one of the main words that especially the Department of Defense have been using. So do you see that as something that needs to happen in the rare earth market, or should we let this play out? Is it still competitive?
Yeah, I think it depends on what you want to achieve. I mentioned previously there are some low cost assets outside of China. There is a willing demand market as well. So it's not like without any government support we won't see anywhere it's outside of China. It's just, I guess the question is more like, do you want a resilient supply chain? Do you want one that can has a bit of diversification within itself. It has true competition. It can withstand a couple of shocks and still exist and can still supply material domestically or regionally or to favored trade partners. If that's what you want, I think that's where you do need more government support. Uh, Not only on the capex side of things, but also on just the opex side of things. If the opex side of things made more sense, capex wouldn't be an issue. That's all. That's of course an oversimplification, but I think it's a fair oversimplification.
Yeah, no, because there'd be a payback, and
Exactly.
it would make sense to do that. It'd be an investment opportunity. Yeah.
Yeah, yeah, that's right. So that's where if you really want a resilient supply chain, if you really want one that's going to be able to withstand quite a few shocks, even geopolitical shocks, yeah, you need that OPEX support, and that's not really what we're seeing at the moment.
And as we were just talking about paybacks and whatnot, are you seeing that any most rare earth projects at the moment are they able to access debt or that type of capital, or is it really because of the? So you see this sometimes, say with other specialist markets, say graphite, for example, it's quite tough to get debt on say a graphite project, or it was especially a few years ago. Um, are we seeing that in the rare earth market because it's unsure of these OPEXs or whether or not they're actually going to be profitable? Would larger banks actually want to touch this?
I think this market is not one for a risk averse investor. Even if the even if you can look at a great asset, um, the metallurgy can be well tested, the ore body can be properly, rigorously studied, and everything can look completely great. And even the OPEX side of things can look fine. There is still a risk in terms of potentially thrifting a little bit, but I think the greater risk there is, you asked this previously, um, around can the price go lower? And that's of course we have a position there. We think it probably won't, but it's a very very realistic question to ask yourself as an investor. So I think this is just fundamentally a very very risky market. So you need investors who are willing to really learn sort of the structure of the market, to really willing to sort of understand the risks and understand the potential payoffs there as well. If you can position yourself well within this market, you can do phenomenally well. But it requires a good understanding of the market itself, and a bit of more of a upfront cost, I guess, in the learning of what the risks are and how to mitigate them. I think that upfront cost within rare earths is higher than in many other commodity markets.
Yeah, agreed. Okay. So say we sit down again, hopefully it'll be sooner than 12 months. Hopefully there'll be a bit of excitement going on in the market, and we can have another chat. But say, for example, we sit down this time in 2025, what do you expect to be telling me?
There's a part of me that thinks I'll be telling you this same exact thing. I think this is going to be a very interesting year for. There's a lot of assets that are about to begin construction, that are about to get their final investment decisions, that are, this is a very important time for the ex-China supply pipeline, and the how things will develop over the next year. Like if we can really de-risk flow sheets, if we can really de-risk capital requirements, if we can really secure those investments across many different parts of the supply chain, will be the key thing that I'll be looking out for this year. So I hope to tell you that things are looking up, and we're seeing more fundamental price support, and we're seeing more and more and more support from OEMs as well coming into this market. But it's that may be a little bit optimistic.
Okay. Well, glass half full. Let's hope for it. Dan, it's been a pleasure. Thank you for updating.
Yeah, thank you very much for having me.